The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. My pleasure to be here. And normally I do my show, which is the Tiger Technicians Hour. That is 11 o'clock till noon every day, every market day, I should say. Same number to call in, 877-927-6648. Love to hear from you. And let's go through a number of things here. I had a question for my show, which I only touched because there were a number of things that are going on, and I saw that the euro-dollar currency pair, which the question was about, was sitting right on the 200-period exponential moving average in the 120-minute chart. Now, if you're new to my voice, or if you're new to me, you'll know that Larry never looks at the moving averages. He has his own technique, so I'm going to be covering things as I see them. So obviously everyone has their particular bailiwicks, and so in this particular instance, I'm looking at moving averages. The futures are up. The ES, the E-mini, using my particular technique, let me show you something. If the E-mini is able to climb above, since this is the futures hour, 1886, and the high today so far is 1884.75. If it is able to go 25 cents above, that will start leg C. I've drawn what I call a left side, right side price tie match, and that points towards the new all-time highs in the E-minis should occur by the 13th of May. It could happen sooner, but that's kind of the area that I was looking at. And so far, the MACD, I use a moving average convergence divergence. That's holding very well. The stochastics pull back under 80%. That's not great, but the on-balance volume, that blue line that you can see there if you're looking at the Tiger TV, that blue line is very positive, and that's the on-balance volume. That's just basically Joe Granville's way years ago, 1950s, developed this technique of a cumulative price movement where if whatever index you're following, if it closes up, you just add the volume total to that, and if it closes down, you subtract it, and it's an ongoing process. And everyone will have a different one. Why? Because you're looking at your starting point could be very different. If you only started using the unbalanced volume, you're looking at a chart that looks back 40 days. It'll only have 40 periods worth of that. So in this case, what I use is something that the moment I found it, I said that's the way, because I originally started using, when I started technical analysis back in the 70s, I used to have this legal pad. I know there's a book with two sides, and the line would go all the way across, and I would divide each one with a little .01 pen, and I'd write in the opening, the closing prices of every single index, and all the Dow stocks, and I'd have a running total of this was every single darn day, and it was a lot of work. And eventually I found that unbalanced volume didn't work for me that way at all, because there were stocks like a Sears, the old Sears and Roebuck, which would move before I got a confirmation of unbalanced volume. And then there was an Eastman Kodak. None of them are there anymore in the Dow. And then Eastman Kodak would always need that unbalanced volume to accelerate, and then the price would move up. So I found that each one had its own characteristics. It was a lot of work. And the easiest thing was when I saw it was notated as a single line move, not highs and lows and closes and opens, but just a single line. That's how I used to chart originally. I used to hand chart with a ruler and engineering paper. So back at the ranch, what we're looking at is that the Dow is up 91, the YM 14 Yes, it's gone to. Now, this is so fascinating. This is leg C in the Chapman wave in the daily chart. But this is something I don't want to get too involved in. Tomorrow's Technical Friday. In fact, I'm going to put down here for Technical Friday, explain what happens at a new high and the letter of the old high. Now, just got to remember to look down at this page tomorrow. Maybe someone in the den will remind me. Look down at your page, you've got to say. Now, because this is leg C, I have to look back to see whether it went above the previous high of 16,574. Today's high is 16,568. It's 6 points away. But wait a minute. I also then have to check out, was the low, the previous low, which was at 15,091 back on the 17th of March, was it broken? Yes, it was. So this is a brand new move. It says it's a blue, meaning it's a buy mode, leg C. In the Dow itself, and this is the question I had. I'll do these two questions at once. The question that then Sarah asked, email. Dow Jones Industrial, what is your Chapman wave count? Well, that's very interesting. I'm going to take away this line because that answers a question, at least tries to answer a question in the den. My count is leg D in the Dow. The Dow Diamonds, leg C. So sometimes there's discrepancy. I hate when that happens because you don't know which one to follow. I go with the root invariably. And the root is the Dow. So the Dow's gone to leg D. If it had not made at 16,015 on the 11th and made a lower low than the previous 16,046 low of, should have written that date, I think it was March the 13th or something, March the 14th, then I would have to put DD, doesn't matter, I don't have to do anything. But let's just say it was a C. I'd have to put a DE/C because that says you've got to bring in the old one and you've got to think of the new one. All right, let's get back to the technicals. As far as I'm concerned, this is very positive action. Why? Because it's saying that there's a chance that the weekly chart, now remember, let me just say this very briefly. In the Chapman wave, the simplest way of thinking of this methodology is that the lowest low bar starts your buy signal, and you count each successively higher peak by alphabetically peak A. Second peak is peak B. Third peak is peak C. Fourth peak is where you can get your biggest pullback. It's exactly what we got on the 3rd of January at 16,583, I think it was. Pulls back to 15,340. Starts a brand new buy signal. And if the Dow goes above 16,632, if it hits that number, that starts leg C in the weekly chart, and that's very positive. It says that any pullback could be sharp, but it shouldn't break down. And it says we should go to at least a leg D before we get to the chance of a really sharp pullback. So I have to take away this right now. It's no more in force, that U pattern, that arch pattern. And let's see what happens. Day's young, anything can happen, but in the meantime, it looks like there's a good chance. We only need 17. The high today was 16,617. All you need is another 17 points, and you're at all-time highs. Look at the S&P, SPX.X. All the S&P needs is 1997.28 to be breached by 1 penny. We're at 1887.57. There's a lot more to go. This is different to the Dow. It's interesting that the Dow's leading. No, wait a minute. The Dow's leading 30 stocks. Try this. NYA. No, Larry loves to look at the NYA, so we'll look at the NYA. The NYA, the New York Stock Exchange, 1,860, I think it is, stocks. All-time high as we speak. All-time high. And it is in leg 10,676. He went to 10,677.01. This is leg C. Now, the question of the den was, and it's a very good, Sarah, the answer is, right as we speak, the Dow is in leg D, daily. The New York Stock Exchange is in leg C. That says we shouldn't get a D until next week sometime. It's very positive. The S&P hasn't made, SPX.X daily is in leg B. It hasn't made leg C yet, so it's a little bit behind. It needs to get to leg C. It just needs to go to 1891.34. And I'm going to put an up arrow. That was there. I don't know why it disappeared. Up arrow. And the laggards, the QQQ series, trading now, nice candle, but lousy action altogether. It needs very much. The Qs need to break above 88.21. Why? Because if they do that, then not only has it broken this very strong resistance line, but it's saying, hey, include me in this rally, even though I'm not going to new highs at this particular time. It's just way too far to go. I doubt whether without a full correction, the Qs could actually get that high. Then the next question was, okay, now we can go to, Peter asked, there we go. Oh, and Peter, I hope the baby's doing well. So here we go, EUR USD. So I wanted to do this. I should really do it tomorrow when it's Technical Friday in the Chapman Wave, but I've just had too many questions about it. So I'm going to do it right now. It's so funny that it should come up. I spent some time early this morning. It's one of the reasons why I missed my LinkedIn buy with the option call and all. I was looking at this and I thought, how am I going to explain to my Master Trader Series folks, the folks who have really delved deeply into the Chapman Wave methodology? This is a chart that I wanted to send out, and I will be sending it out to those who did my last course. Anyone who's a little bit more advanced in the Chapman Wave who really wants to know and can't see the chart, I will send this to you if you send me an email and ask me. So what we have here is in the euro-dollar currency pair. You remember the objective in the Chapman Wave is to get you to at least a D, the fourth highest peak. It can go to a fifth highest peak at E, a sixth highest peak at F, a seventh highest peak at G. But like on the piano, that you can go C, D, E, F, G, A, B, and then the C is the octave, the repeated note. There are only 7 notes. So in my waveform, there are only 7 highs. If you get to the 8th high, there's no H. You restart. It means that you've either restarted because you've recycled, that's probably leg C, or you've got to do some other homework to find out exactly did you miss something or whatever. There's no H. So it went to an E and then pulled back in a cup formation. This is the alternate waveform I want to talk about. I'll be right back. Basil Chapman, sitting in for Larry Pesavento. And we'll also look at natural gas, UNG. I wanted to show a chart on that. I'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Hi, folks. So we're back. So now we're looking at the euro. And this is what I want to do. I'll do this real quickly, just looking at the chart pattern. Let's just do pattern first. The pattern says that there was this, in my CD called Introducing the Chapman Wave Methodology, there's something that I discussed. I like to be very visual. Yeah, you can use the mathematics, very important, but I'm also very visual. And there's a pattern that I talk about that looks like the backhoe that picks up the gravel, lifts it up, and then just dumps it. And I call this the drop bucket. But it is really a double top formation. The first high was back after coming off the February low way down in the 1.34 area. What does it do? The euro-dollar currency pair goes to 1.396 on the 13th of March. Then at peak E in the Chapman wave with the MACD and stochastic great. And then there's a sharp pullback, pulls back into trough D on the way down. We call them troughs, lower cases. Goes to trough D at 1.367 on the 4th of April. And then it has a spike to the upside at a doji high. And then that spike cannot hold it. I wish that would stop doing it. And instead, at 1.39051 on the 11th of April, it pulls back, but it has a high-level consolidation. It's a pattern we've seen in a couple of stocks today. And that right cup is with a much higher low bar, and then it makes a higher high. Well, within that, for a long time now, I've started to count. If I have a significant low, in this case, the low of the 4th of April, pullbacks after that, especially when you've got a big pattern here, this is almost like an overlapping wave in a sense, and the pullbacks say that we are still holding way above the low. I tend to go with an alternate count, but I change the color to say, hey, this is not your usual Chapman wave methodology. This is a variation. Show that it's a variation so that it is a legitimate template that you're using. You're not form-fitting or just changing things. I've done it enough to say that when, and I'd already done this before the spike today and pullback, that even though we made lower lows, I'm counting the peaks that can give you an A to a B. I want to get there quicker. In other words, I want to get to a potential D sooner so that I'm not surprised. I don't want to get to a C when it's actually a D and then find out, oh, I forgot something. I'd rather say, hey, that might be a C, but if it's a D, I better be careful. And right here, the alternate waveform says instead of B, the traditional way of counting peak A and then a peak B, this is an alternate wave, an inside buy mode that went to pink A, pink B, pink C, pink D, and then you get the spike today to an E at 1.3992. And what happens? Draghi, somebody does something, next thing you know, kaplop, goes under the 9 EMA. So that is for Peter. Take the chart. If you're looking at Tiger TV, take a picture, study it, and I'll show you exactly what I'm talking about. This, I'm putting an X under it. It doesn't count. I'm putting the X right here, and then I'm going to make it a little lower, and I'll make it a bit bigger, because this is something I want you to send out as well. Yeah, just got to remember to do that. That is a low, but I'm not counting it as a low. I'm counting, a lot of colors. I'll put that in red. Not counting it. Why? Because this is the low right here. That's the significant low. So it's not easy to explain without seeing the pictures, but boy, if you see the picture, you get exactly what I mean. That you can count an inside buy mode even if it drops down below what you would have normally called as a trough, because it's way above the initial low bar, and that's the case here. So this goes A, and that becomes an A minus. Right there, A minus. And that becomes A, and then it goes B, and then it plops underneath, but that's okay, because it goes to a higher high, that's C, D, and that's, you've got to be aware of the pattern that I was looking at. I wouldn't have done it unless I was looking at the pattern that said, hey, please be aware that you've got to keep counting, because if you make a top and fail, you've gotten a cup pattern that is the drop bucket, double top pattern in my CD introducing the Chapman wave methodology. I don't have it up right now, but that is the drop bucket. I think it's chapter 22. Yep, chapter 22, slide 366. Okay, so that's the explanation there. So so that's an E, and that's an E. And then in the weekly chart, we need to talk about this weekly chart because this is very important. I'll be right back. Basil Chapman sitting in for Larry Pesavento. Yep, we'll have one segment to go, and I'll be leaving 10 minutes before the hour, but I'll be here. Give a call if you need me.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
So, folks, Basil Chapman sitting for Larry Pesavento. Look at this monthly chart of the euro dollar. It's walking the 9-period moving average, that black line. It's broken the very long-term, let me just pull this back, very long-term down channel, which is what I call the inside track. It isn't a full down channel to the bottoms. It's just a high-level trading area that says whenever it gets into this area, it gets repelled, except it didn't get repelled. It didn't even get propelled. It just climbs slowly. But in the Chapman wave methodology, the quicker you get to a CD, especially, I've never seen this before, just about every other month, a new high, and then back down, a new recovery high. It goes C, D, E, and now we're in leg F. That says, gee, you got to be careful because invariably you're going to have some kind of a pullback. Not a major decline, just a pullback. And that's the monthly. So a pullback in the monthly is a big decline in the daily. Now look at the weekly chart. The weekly chart is the pattern that I call, and that's well pointed out, Peter. Yes, this is a right arm extension. To a certain extent, it's more. It even has a resemblance to the rogue wave in that if you were short because the price, the fast-moving average was under the slow-moving average, this is the weekly chart of the euro-dollar, and the stochastic only this time went to 75%, whereas last time it went to 80 or 81%, that's a divergence. And you had the rally in the stochastic say, okay, you can move higher, but it didn't go to a new recovery high. So this has all the connotations that say, make it real simple. The 9-period moving average is 1.3820. If, for any reason, the euro-dollar currency closes this Friday or next Friday underneath 1.382 1120, especially under this major new trend line that's formed, and that'll be 1.378. That's going to be a very negative connotation, because then you'll have the chance to go all the way back into that very ugly candle of, the very strong candle of the 11th of April, which has a low of 1.3695. So the best thing for the euro is if it's able to bounce, but it can't just bounce. It has to bounce right into halfway of 1.3935 of that wick, the wick of today, of this week. And if it does it, there's a chance it could try to go. Now, I had already called that a peak E, and then this is an F/B. There's every chance this is going to become a peak F in the weekly that says, be careful, euro's going to pull back. Now, what does that say to the dollar? Well, let's look at the dollar. It says for the first time, you've now got the chance that the dollar can have a pretty decent rally and maybe sustain the rally, but we won't know until the dollar itself is able to climb. Its dollar index is at 79.34. The dollar needs to climb into the wick, into this ugly candle of the 2nd of May with a high of 79.85. To tell you the truth, I don't really care about anything here. If the dollar cannot get to the 80.20, to the 80.45 level as the euro's pulling back, that's not going to be good. So I'm looking at this and I'm saying, okay, dollar, you made that pattern we talk about, the H pattern in my CD introducing the Chapman wave methodology. It's a pattern that goes under the title, the dreaded H. Someone gave a webinar recently, and he gave it on his interpretation of called it the dreaded H. It was a very good webinar, but it didn't quite nail the dreaded H theory. The theory here is that the moment you break the left side bar and go below, you've got within one bar, it's actually now 2 bars, to break above, close above. In this case, the currency has to close above, the dollar has to close above 79.33, and in fact, it has to very quickly get into the 79.60s. Let's go to Brent in Martinez. Hi, Brent. How are you?
I'm doing very well, Basil. How about you?
Well, I had your name up here. I showed people in the den. There's a particular stock that I was asked about. Jay in the den, Jason, J&J wanted to know about it. And I've got, wow, good call, George and Brent. And this is on PBR, Petróleo Brasileiro SA, which is trading at 15.31. So it's there for well, I would say it's now there forever. You'd like to look at?
I'm calling about, I did 2 white lightning trades this morning, one on Regeneron, which I'm already out of the position. I did well. I actually made 500% on the trade.
Fabulous.
And then I have a similar trade on Priceline.
Good.
And I'm doing fine with that. I'm holding that one a little longer. I'll likely be out today. I just want to get your sense. Obviously, I bought at the low this morning. It's come off of that. I just feel like it might be a little range bound now. I just want to get your sense of what you thought it might do, short term here. Okay,
very good. What I had done some time ago is Priceline. I had drawn in a left side, right side price time match. To me, that's a technique that is either precisely mathematically X number of bars to the left, you find the plumb line midpoint, and then you have exactly X number of bars to the right, either up or down. It makes no difference. It's time based on the plumb line. But over the years, I've found that if you learn how to identify certain candles, you can get a sense of the structure, and more or less, sometimes it's very accurate if you go to the right kind of candle. Sometimes it misses and you have to start moving it to the left or the right. Well, I've drawn this in, and I had Priceline coming to test the doji candle of the 5th of February after making a peak D high at 1378.96, also with a doji candle at the top. This is a beautiful one at the bottom of 1103.90. Well, it didn't do that. It did it on the 28th of April. It went to 1107.27 instead of the 1103. Then it rallies up, makes the arch formation, and today plunges below, makes a low of 1087.26, and now is bouncing back 1087. The way I'm looking at this, there's a really, really good chance that the momentum stocks, of which Priceline is probably one of the leaders, that Priceline will in fact rally further. So I like your idea. You take profits and options, fabulous profits, and in this particular one, you're going to hold it just a little longer. And I would have a target of 1163 as a potential if you do want to hold longer. My 120-minute chart, let me see if I've updated it. It went to peak A. There's your A. There's your B. There's your C. And there's your requisite D. Unbelievable, especially the 120-minute charts, how they are so often. They go to D and then they pull back, and this is exactly what it did. The left side, right side, price time match to that candle. Yep, I see it. I think you've got yourself a nice position trade, but what's really important, as we're getting to these highs, this is where you find the greatest pressure. It's been like this for the rectangle formation in the market for a long time. So if we suddenly pull back tomorrow because of jobs or whatever it is, that's going to make it a little harder to take out the high, and I suspect that the momentum stocks will tell us tomorrow if there is some weakness early in the morning before we attempt maybe next week to go to all-time highs. If that is delayed, I suspect that Priceline, Google, we're looking at Amazon, we're looking at LinkedIn. I suspect these stocks are going to be the ones, I'd even include Tesla, are going to tell us if they don't at all pull back tomorrow. In fact, they go to higher highs. The rotation means that those guys are going to move higher. We might start to stall getting to these highs, and that, in a sense, answers the question that was in the den. What would be a huge breakout to the upside? Is it possible now? I think there's enough resistance to say, and the VIX index to me is getting to the point where there could be a turnaround. I think you've got the right play. I think you're in the right stock. I don't know what the earnings report, what it was, but it's been favorably received now. It's up 9.21 at 1140. I think you've got it. So you would keep the options. You'd not buy the position. You would just use the call options and hold some?
Yeah, I don't only just trade in and out of the option. I don't ever buy the underlying equity. I only strictly trade the option itself. So
then you know what I'm going to suggest, since you're the one that made this fantastic trade, I should be calling you. So I'm going to say to you, you're the one that did the trade. I think you will know exactly when to get out, because if you get out in the right time, which could be right now, then at least part of your position, I would definitely take something off right now to reward yourself. It's a gift. You know that. So I definitely would. Then I would, if I took some off, I would say, you know what, I'm going to keep a little bit, but if it pulls back to the 1140 area in the next hour, I might take the whole thing off, and you can do it again. If there's a dip tomorrow, I would maybe do it again.
Oh, yeah, I've traded this thing probably at least a dozen times in the last month, up and down. So it has a big enough risk you can kind of do that. You just have a pretty good sense of what the stock's going to do. So.
Yeah, not only that, look at the waveform. I love the stock. I don't trade it. I do watch it, but it really it behaves just exactly what I would love to see. Even the top at 1378.96 was that cup formation that I was talking about, the drop bucket formation. Perfect. So yes, I agree. If you get a good sense of what it can do, using options actually options are expensive, so it's almost like trading a stock. But in fact, you could do very nicely. Okay, I'm going to leave it to you. I would just suggest that if it pulls back a little more, I take my profits and I try to do it again in the next day or two, because I think it's going to 1163. Hey, thanks for calling.
Thank you very much, Basil. Have a nice day. You
too. Let's go to Jim in Denver. Hi, Jim. How are you?
I'm okay, Basil. Thanks. Just curious, you talked a little bit about gold, but I've got some options on GLD. They're June 21 options.
So this is these are calls.
Yes.
So wait. So you got June 121s?
No, June 21 calls. I've got several different price ranges. I was just curious, do you think it's something I should hold or not?
We're talking June. The way I'm looking at this chart, and I had drawn it in a while back. Let me just do this. I don't want to run out of time because this is the last segment. I've maybe got about four minutes to go. I had drawn it was in the weekly chart, I believe it was. Let me just go back to this. So we've got gold. I'm going to look at the weekly chart because we're looking at quite a number of weeks. Yeah, I had drawn this a while back, and my impression, there it is. I knew I had drawn it. I had drawn the H in the Chapman wave methodology, my CD introduced in the Chapman wave methodology. I talk about the lowercase h that can form an M pattern, and that M pattern can actually become a continuous pattern. So if the cycle continues, and if the euro, let's just imagine that the euro does pull back further. I didn't give upside potential for the euro. All I can say is that if the euro goes back 50% higher than it did on the pullback today, then you've got to say, just stuck in a trading range. But if the euro pulls back, the dollar could rally. If the dollar rallies, gold normally, it doesn't always have to happen that way, but gold often pulls back. So I'm looking at this and I'm saying I would be real careful. I don't want you to do anything right this moment, but I would say that if you see the GLD trading in the 122 area, my suggestion would be to take a little bit off of your position, to lighten up a little bit. I know you'll be losing money because it's going to take a lot of the premium out. I'd rather have that cash that you can put back if gold does go to 118, GLD 118 to 116, because that's where it could have another decent rally. So I want you to think about that just in terms of keeping your capital. When you use options, capital preservation, well, anything, but especially options because it's so quick. Capital preservation is the most important thing. Yeah. So that's all I'm going to say to you, that the pattern that I drew is being fulfilled. If that happens, I have to say, whoa, that's good. There was a Chapman wave, A to B equals C to D. That's the classic bolts, lightning bolt, but it took a lot of time to do so. I'm going to take that out there. The price worked very well, but not the time frame. So now all I've got is an H. It actually looks more like a V, but I'm calling it a lowercase h, goes to the low back in April, bounces, goes to a high in May, and now it's starting to pull back, and that means that that whole area that I was talking about, for instance, the low of 123.06 that was made the week of the 1st of May, wow, you don't want to see, if that gets taken out, then it's going to retest the whole low area going to 122s. So I'm just saying I'd be a little bit careful, and the best thing for you would be is if by tomorrow, instead of being very weak, gold actually holds well and is actually up $3, and then Monday you come in and gold is acting very well again. Then you can get your bounce. I do see that it's limited to the upside. Yep, upside and to the downside. So my recommendation is if everything holds and you're still in the trade, if the GLD can get back to 125.50, start taking a little bit off. You can always put it back on, but you don't want it to come back down again after that. Hope that helps you, Jim. We'll look at it again maybe next week. Thanks for calling. Folks, Basil Chapman, there will be another segment, but I won't be doing it. Probably it's music or something. But I will be back to this afternoon, talk with Tom O'Brien. I'll be back for my usual show, 11 o'clock tomorrow. Don't forget my opening call. That's my daily newsletter. I'll be back tomorrow. Thank you.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.